Hey everybody, it's Brian Christopher. Today I'm joined by my friend and colleague Ian King. He's a fellow editor here at Smart Profits Daily. Ian, how are you?
Doing great, Brian. What's happening?
Just watching this market, which is plenty crazy. Not to mention the goings on in DC. But anyways, before Ian and I chat, I want to remind you guys, please click on the subscribe button below to subscribe to our channel, so you can get updates on what's happening when you click the bell. And also, please leave a comment so we have some things to talk about later. A couple weeks ago, Ian, you and I talked about Tesla. We talked about the fact you had just sold the second half of your position at $478 a share, which was actually within 4% of the top. We had a lot of comments on that discussion as well. And most of those commenters are Tesla bulls, and some weren't, but it was very clear that there's interest in what's going on at Tesla, which was great because on Tuesday, Tesla hosted their battery day. And I thought we could spend a couple minutes talking about that, Ian, and maybe you could give, some general thoughts about, what it was intended to do, and what you got out of it.
Yeah, sure. I mean, let's start out by talking about just the driving narrative of the electric vehicle sector. And the big idea here is that electric vehicles in the next decade are going to replace the internal combustion engine. And it's not because electric vehicles are more environmentally conscious, which obviously they are. It's simple economics. An electric vehicle in the next couple of years is going to be cheaper than an internal combustion engine. And it's also going to be cheaper to maintain because you don't have as many moving parts. So that's why the growth in electric vehicle is going to be like 100x from where it was in 2018. So 2018 sales were less than 1 million, and we're going to see 100x annual growth, or 100x number of vehicles on the road by 2030. The big point that happens here is this, what's called the crossover. And that's the point at which an electric vehicle becomes cheaper than an internal combustion engine to produce. Right now, electric vehicles are cheaper if you add in all the government subsidies. However, we're getting to a point that it's going to be cheaper to produce an electric vehicle. A couple of years ago, most analysts thought the crossover wasn't going to happen until about 2025. But now it looks like we could be looking at this at 2023. And as you mentioned, let's talk about Battery Day, because Elon Musk said that they're going to have a $25,000 electric vehicle out in the next couple of years. Now, Musk is notorious for promising things that don't come to fruition in the time frame he promises them. So I say that with a huge grain of salt. And people were really excited about Battery Day because we were going to get this, quote unquote, 1,000,000-mile battery, a battery that lasts for 1,000,000 miles. And the reason why everyone is so excited about Tesla is because they've got just a huge lead on the industry. Tesla started making electric vehicles back in 2006, 2007. They've started putting them on the roads back around 2010 with the Model S. And you're now starting to see other auto manufacturers roll out their, initial fleet. So everyone is 7 to 10 years behind Tesla's technology. And that's why Tesla cars, in terms of performance metrics, are so much superior. Now, Brian, you bring up a great point, because there is the reality of what Tesla is, then there's also the stock price, right? So if you look at the price of Tesla, it's now valued as the most valuable car company in the world. It surpassed Toyota a couple months ago. And people are just, looking at Tesla as they're going to be the first to autonomy, even though it's kind of a race with Google and GM Cruise also, and Uber has an autonomous unit. So Tesla is not necessarily the leader in autonomy as much as it is in electric vehicles. Electric vehicles are only going to take us so far. But let's talk about Battery Day, because there are a couple important developments that I want to highlight our readers on. And the first, I want to bring up this chart of the new trajectory of the dollar per kilowatt hour per battery. And Tesla believes that, as the curve has come down in the last decade, dollars per kilowatt has dropped about 90% from where it was a decade ago. And Tesla believes in 2022 and beyond, they're going to start to see an accelerated drop in the cost of producing a battery. And they've outlined some steps on how they're going to do that. They bought a big lithium mine in Nevada, and they're also adding nickel, which is a new type of semiconductor to their batteries. And the other thing I want to talk about is the Tesla's vertical integration, where they're going to start to see not only range increase, but also this dollar per kilowatt reduction. But also, what is interesting about this is it's going to be a race, a manufacturing race. Okay, so 10 years from now, most of these cars are all going to look the same. And companies like Toyota and GM are going to have similar products to Tesla, even they don't now. It really is going to come down to who can manufacture cars the fastest at the cheapest price point, because it all comes down to economics. And so Tesla is really focusing on that manufacturing viewpoint like they haven't in the past, because they want to be able to produce more cars from each factory, because Elon wants to be doing 20 million cars a year by the end of this decade. Now, look, we're in 2020 right now, so a lot of these developments are just so far ahead of where we are right now. And as an investor, I still like the company. I mean, I don't necessarily like the stock at these levels, but I think that if we do get a pullback from a lot of the hype that we've seen over the last several months, Tesla is going to be a stock that you want to keep in your portfolio for the next decade. So that is most of my spiel on Tesla, Brian.
Well, and I mean, the Tesla share price, it's almost a share price that you should expect those kind of pullbacks on. I mean, as of yesterday, shares were down 24% from their high, which for Tesla, I mean, I understand that now that's a lot more market cap, but on a percentage basis, it's not really that crazy of a thing. I mean, it fell 61% in February and March. And if we go back to just a couple of days ago, it actually fell 34% from August 31st to September 8th. I mean, we're going to have this kind of volatility in the stock. And I guess, you know, the important thing, there's a variety of important things. Their expectations are going to be what they are. They're going to vary. And they tried in their presentation, I think, to show you that from an operational perspective, there is substance behind what they're doing, and even more specifically, operational improvements that are necessary for the next generation, the next, you know, V whatever we are, 4.0, 5.0 of Tesla. I mean, it's a process that continues, right? Like in terms.
Yeah, and you bring up a good point. Now, think about electric vehicles being a new form of technology, and all new technology, whether it be, you know, software with Microsoft in the 90s, cryptocurrencies in 2017 with the rally in Bitcoin, you know, or even cloud stocks. These technologies have this hype cycle where they just kind of go up like 10x in the last year, like Tesla has. You get to this sort of point in the cycle where you have all these copycats come in. So in the electric vehicle space, you're seeing all these special purpose acquisition companies now launch. You've got Fisker has one. You've got Nikola, which is another one that is, you know, I think is on the verge of fraud and bankruptcy. And so there are all these other startups that are trying to do what Tesla is, because there is an enormous amount of capital that investors are willing to put into any company that says they're creating an electric vehicle. In fact, there was a Hong Kong solar company yesterday, Brian. I don't know if you saw this. The ticker symbol SPI, that they manufacture solar cells, and they decided yesterday that they were going to start producing electric vehicles as well as solar powered charging stations. And the stock went from $1 to like $45 or something like that, and then pulled back to 60. It was up 4,500% on the day. And so that just shows you what type of mania that we're in, and everyone just trying to, you know, it's like during .com when every company decided to throw .com at the end of their name to try to get that premium that investors were paying. Tesla is really the one company you want to own in this space. And if you're chasing all these other SPACs down, I mean, they're good for a trade here and there, but I think in the long run, you just got to be careful that they just don't have the same technology that Tesla does. So The last thing I'll end with is we're going to move towards this sort of more mature phase in the electric vehicle space. And especially when it comes to Tesla, if you look at the great runs of Microsoft or Intel back in the day or Dell, they had these huge couple of years and then they plateaued for 5, maybe 10 years where it kind of chopped around. Amazon's another good example of this. Amazon had a great rally from 2009 to 2015. And then 3 or 4 years, the stock did nothing. It bounced around between 1,000 and 1,500 until the last couple of years. So I think that's what we're going to see in Tesla. I think we'll see more kind of sideways action where it stays range bound and not really the best trade or place you want to put your money for the next couple of years. But I still think you can buy it advantageously when a lot of these new investors that come in, start puking it out, realizing it's not going up as much as it was a few months ago.
That's right. And with the advent of fractional shares, I mean, you can buy a couple dollars of Tesla if it just gets you to focus on the story a little bit more. Like I'm a shareholder. I want to follow this story. It's an important story for everybody to follow. You don't really have to own the shares per se, but for some people that makes it more real. But
yeah, that's something that makes me concerned about the stock is because when I was watching Tesla Battery Day and I was streaming it on YouTube, there's like a comment section where people can comment. And, Elon's announcing all this like really interesting stuff when it comes to battery, where they're putting the batteries actually in the chassis of the car now. But like the comments were, oh, Tesla's going to the moon, Tesla 500. It's like no one really cares about the company. They just care about the stock going up. And when I see that, I get worried about this type of investment behavior, which to me, looks like a mania. And we know how most manias end. So
that's right.
I had to be really careful at this point.
And during the presentation, you also saw Elon, tempering expectations, even compared to maybe what some of his colleagues were saying about they've definitely made advancements, but Elon doesn't want the message to be received that, next year, next month, something like that, we're going to have this functionality completed and in process. He's ratcheted back his behavior in terms of expectations that he provides to the street. And that is probably a good thing because we know that, and we've seen Tesla doing amazing things. So
yeah, I'm sure the lawyers got to him, right? Like before he gets up there and starts making all these promises not going to deliver on, the lawyers are like, well, you should just caveat those statements with, we hope to get it out, the $25,000 car out by 2023, but it's a very difficult problem to solve, even though we're, feverishly working on it. So yeah, I mean, you'd like to see those expectations tempered down if you're an investor.
And again, at the same time, as you mentioned, you're not seeing anybody else make this presentation. They're the furthest along. So like some people like to, crap on them. I was like, well, okay, show me the comparison in terms of advancements. But
yeah, I mean, just look at the Plaid Model S. Now, this new car that they announced is not a mass market car. The base price tag is $140,000, but it's a car that goes from 0 to 60 in less than 2 seconds. Now, if you can compare that to, if you want that type of speed in a regular car, you're looking at a Bugatti Veyron, which is going to cost you $750,000. So just the fact that if you're extraordinarily rich and can afford a $150,000 car, you can get the type of luxury that you normally have to pay close to $1 million to, which is interesting, but it's not going to be a massive seller for Tesla. What we want to see is this $25,000 come out. Now, I've always said that Tesla has no competitors. I got to tell you, I've been reading about the specs on the Volkswagen electrics that are coming out, and they're coming out with a mid-size SUV at the end of this year called the i4 or the ID4, which looks pretty interesting. It has comparable range to the Model Y. It's at a pretty good price point. But we got to see if there's any build quality issues with it. What do the batteries look like? So I don't know. I mean, Tesla is definitely starting to see more competition, or at least automakers are catching up, even though Tesla still has that 7 to 10 year lead, like I mentioned.
That's right. All right. Well, let's wrap it up here. Thank you, Ian. This is pretty awesome stuff.
Yeah. Also, if you're a viewer, feel free to leave us a comment about Tesla. Let us know what you're thinking. If you are a bullish or bearish on the stock, we want to hear from you. We love to open up a conversation.
That's right. And thank you to those of you who have already subscribed. And if you haven't, you might as well. Until next time, see you guys later.